So currently, this is our week 5 portfolio return. As you can see in the lower right area right here, we're at 0.49. Ignore that. We're at 0.49% increase. So you'll see a divergence here, kind of a drop and then a raise towards the end of the week. So this is going Wednesday, Thursday into Friday. As you see, no new net cash flow, and we have a market gain of 0.74 cents. So again, up 0.49% in 1 week. And now, since we're a month into our portfolio, we can now look at our monthly data. So we have our weekly data, and now we can start looking at our monthly data. So you see this large spike in here. This is about a 30% increase in our price from $100. You see to the left here, goes up, then it goes about to $130, so about 30% increase. That's just from the deposit. That has nothing to do with our portfolio growth in terms of performance. So if you look down here, our money rate of return is only 1.20%. So it's not like 30% because we auto deposited $30. Down here, the 1.2% is based on our trading activity. So we're positive 1.2% for our trading. Our market gain for the month is 1.31. So now I can show every week the weekly and monthly return. And then when we get to kind of that third month, then I could show weekly, monthly, and quarterly returns. So we can kind of see over a longer time horizon, different time frames, how our portfolio is performing. So again, this is our weekly return. So this is a week. This is just a 1 week chart, so 0.49%. And this is a monthly, 1.20%. So this is our weekly percentages. So we're actually flat on gold at 0%. No change in gold. Still at 30% of our portfolio, our largest holding. Bonds were up 0.59% in our portfolio, or 19 cents. And we're still at that 25% rating for bonds. Based on the Federal Reserve's meeting recently at Jackson Hole, they're talking about possibly lowering rates. So we may see this change, go up or down. We don't know yet. But if interest rates go down, bonds could have a positive effect to go up. We don't know yet, but we're going to watch for that. Our US dollar down 1.54%, you see here. And then we're still having at a 20% allocation in our portfolio. Now, if the Federal Reserve does lower rates, I may lower this. Actually, with the performance we've been having, I may lower it sooner than that. We might break it down to 15%. We'll see. I might add the 5% to bonds, possibly. Our stocks were up 2.13%, and we still have that at a 10% weighting. Our commodities were up 1.62%, and we have that at a 10% weighting. And our Bitcoin were up 6.42%, and we have that as a 5% weighting. So now we can also look at our monthly percentages as well. So now we have our monthly percentages for week 5. So gold for the month is up 4.28%, or $1.41. Still at 30% weighting. All these weightings are going to be the same right here that we just saw. So gold 4.28%. Bonds up 2.16%, or 51 cents. Dollar down 3.27%, or 0.73 cents. And this is why I'm considering reducing the position, because it's kind of been going down. Now this is over a month it's been going down. Stocks up 3.71%, or 41 cents. Commodities down 2.71%, or 41 cents. And remember, we did reduce this. This used to be higher in our portfolio. We reduced it down to 10%. So that's the reason why it's just been going down. And Bitcoin, although on a weekly, it's up 6.42%, on a monthly chart, monthly trading, it's only up 2.57, so a smaller amount. So it's been a lot of volatility. That's up 14 cents. So that's our monthly percentages.